Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Well, Indian equity markets are set to rally for 8th straight session today, scaling newer highs for 4th consecutive session out there. We'll talk about the action-packed day, weekly auction expiry, crude prices and FM comments. These are going to be some of the factors that needs to be watched out for. Talk about global cues. Gift Nifty indicates a mildly negative start coming in for the last week, down by as much as 60 points, and Asian shares too slip with Wall Street. Oil, however, helps bonds at this point of time. Overnight, Wall Street ended lower for a third straight day amid a volatile session. 10-year Treasury slides to September lows amidst a cool-off in the US labor market data. Talk about FIIs. Well, they've turned net seller for the first time in the last 10 consecutive session and have sold off shares worth around 79.88 crore. But the amount is minuscule there, not even to 100 crores. So more momentum perhaps or direction from FIIs will typically be watched out for. DIIs, well, they've bought equities to an extent of 1,372 crore. In terms of what we have for FNOQs, well, FIIs have been the net buyers in index futures, stock futures. Along with that, they've been sellers, however, in Bank Nifty futures and Bank Nifty options. Talk about FNO ban. What still remains, what is new in the ban? There is no new entry. What still remains in the ban is Delta Corp, Indiabulls Housing Finance, India Cements, Z Limited. Talk about Nifty PCR. It's at 1.37 versus 1.39%, indicating lesser calls are now written as compared to lesser puts are now written to as compared to puts. Let's get going with some stock strategies that we have for the day, along with the recommendation from Ruchit Jain, who joins us early this morning to talk about the direction of the markets and the strategies. Well, Ruchit Jain, lead research analyst at 5paisa. Morning there.
Hi, very good morning, Nickey. First of all, thanks for having me on your show today.
Sure. Ruchit, I'm just going to start off with asking you about, the 4th consecutive session of bull run that we're seeing. That's one. It's a record high rally that we are looking at. 7th, 8th consecutive session of momentum coming in for the markets. What seems to be the top for the markets like that, and what is the strategy that one can be looking at right now?
So, Nickey, the overall trend for the market, there's no doubt that it remains positive. And especially what we have seen that the recent corrections which were there in the market, they were mainly because of FIS selling. When they have sellers in the cash market and also in the index future segment, they were on the short side. That was the phase where markets were showing some good corrections. But of late, we have seen that they have also turned net buyers. They have been buying in the cash segment, also in the index futures. I think after a long period of time, they have turned net buyers with net positions of about 55% on the long side now. So, if they have been buying, then of course, I think the momentum would continue. Now, usually whenever Nifty or any stock comes to all-time high, the retracements of previous correction gives us a fair idea of where next resistance could be. And 161.8% retracement of that recent correction, which we saw a couple of months ago, that is coming around 21,080. So I think the markets could see some more momentum towards 21,080 and some profit booking could be seen over there because the momentum readings are overbought. So, but any kind of decline or consolidation if comes, I think that should again be seen as a buying opportunity. There are no signs of any kind of reversal in the trend. So for today or tomorrow, next 1 or 2 trading sessions, we expect the markets to cross the 21,000 mark and maybe around 21,100 could be a good level where some profit booking could be done.
That's where the problem is, right? Market is not giving you the chance to enter into the market. It seems like a fear of completely missing out. And of course, do you think, with the weekly expiry could be a little different for people who are looking to now enter at these levels? Clearly some sense of exuberance there, but what's your strategy also coming in on Bank Nifty?
Yeah, so those who have missed the rally, I think they should wait for next leg of decline or consolidation. When momentum readings cool off from their overbought zone, then one should look for buying opportunities over there. Banking index, I think, we have seen a good catch-up move in this week in the banking index too. Especially if you look at the index heavyweights, such as HDFC Bank, ICICIDIRECT Bank, State Bank of India, Axis Bank to include it in the list. After a long period of time, these stocks have witnessed a good buying interest. So I think the broader trend still continues to be positive over there. 46,500 to 400 would be seen as the immediate support for the banking index, and we can expect the index to head higher towards 48,000 in the short to medium term.
Sure. Apart from that, I'd also want to ask about two more recommendations for the day that you think could be good strategies.
So a couple of recommendations are there. One first would be a buy call in LTTS. So specific IT stocks have seen some consolidation. Now LTTS technically has formed a continued bullish continuation pattern, and we have seen a good close yesterday above the previous swing highs. So I think this stock would be could see some good momentum in the short term. So short term traders can buy LTTS with stop loss below 47.70, expecting targets around 5,000. And defense stocks have been doing quite well, irrespective of where the market, even during the correction times, corrective phases, we have seen that a good buying momentum was seen in defense stocks. So Cochin Shipyard still looks much positive over here. The previous swing highs have been crossed. The price volume action is good. The volumes are good in spite of the recent run up. So I think one can look to trade over here as well with stop below 1240 for possible targets around 1350 and beyond.
Sure, we're just going to address in the markets in just a jiffy, but it looks like we're about to have a good start, or let's just say like the momentum has been for the last 3 consecutive session, record high levels. That's what we are eyeing, but a couple of factors today that could be dictating the trend of the markets. Of course, there is going to be a weekly option expiry which is at play, and of course could be a game changer. That's where we are supposed to see if any amount of volatility actually creeps into the market. But there is some sense of consolidation which has already taken place. Well, there are no complaints there. We've seen good run thus far in the last 4 sessions, actually last 3, 8 sessions now. This could have been the 8th one, but a bit of consolidation there. I would just say 0.25% thereabout, the losses in that range. Market at this point of time for the people who are now looking at entering into the markets could be serving as an entry point. Of course, we are going to be chatting about that in detail with Ruchit in just a bit. But right now, there is a bit of consolidation which has taken place, 20,850 levels. That's where little above that level, but holding on to that 20,800 mark. Talk about Bank Nifty just to see where the pressure essentially is coming in from. Bank Nifty, well, no surprise for really getting that. Financials have been driving the markets at least for the last 3 consecutive sessions. It was essentially ICICI Bank, Axis Bank, and the likes of private sector banks which were driving the market a bit higher. But Bank Nifty is the one which is consolidating a little more in trade today. Let's also talk about the mid cap and the small cap performance. Well, a bit of underperformance coming in from those ones as well. In terms of sectoral indices that we have, let's just see how IT has been doing rather. A small cap index is showing is bucking the trend and up with a flat start with positive bias. So a bit of a contradictory trend coming in, but Nifty IT also a flat start with negative bias. And in terms of other sectoral indices that we have on the chart, something in the like of PSU banks, which essentially has been doing too well in the last few sessions. In fact, the entire year it's outperformed Nifty as well as Bank Nifty. That index too is trading a lower in trade today. In talk about the metal and the pharma and the other sectoral indices that we have, these two essentially, metal is doing well. It's holding up in green, 0.1% of gains coming in for that one, and pharma right now too is acting a little subdued in early deals. Well, let's bring in the top gainers and the top losers for the day, just to see where the pressure essentially is coming in. Well, top Nifty gainers, at least we have TPCL, Adani Ports and Maruti Suzuki, essentially Asian Paints, DRL and Ultratech Cement. These are some of the top gainers that we have. Hero MotoCorp, UPL and JSW Steel. Another top gainers that we have on the list right now. Talk about the top losers, just to see where the pressure is essentially coming in from. HUL, Apollo Hospital and Bharti Airtel. These are some of the list stocks there. ONGC, ICICI Bank, Infosys. So clearly we can see the trend now. Britannia, Bajaj Financials along with that, Bajaj Fin along with that Nestle India. These are some of the other top losers that we have on the screen. So a bit of consolidation, which typically is taking place also in these banking names, so to say ICICI Bank. But Ruchit, comment on this one. A bit of consolidation. Do you think this acts as a good entry point for people now looking to go long in a market like this? What's going to be the strategy for trading into a market like this?
Buy and dip strategy should be kept for today's trading session as well. Intraday support for Nifty would coming around 20,800 to 20,830 range. So if we get some more dip towards the 20,800, 830 range, I think that should be good level to go long on in the Nifty for intraday.
All right, a bit more consolidation. Talk about Bank Nifty also. It's actually given that, a bit of consolidation blip there also. Let's just say a bit of sell-off which has taken place in early deals after the good run that we've seen, at least for the private banks like ICICI Bank, HDFC Bank. Now, within that basket, what do you like? And first, your view on Bank Nifty.
Yeah, so as we said, the broader trend for Bank Nifty is also not negative, but just because of that sharp run up in two trading sessions, I think what we are witnessing is a pullback move of that up move. So downside seems to be limited here as well. 46,400 to 300 would be seen as a support for the day today. So I think definitely some declines. If we go towards that 46,300, then that could be a good opportunity where traders should look for buying opportunity within the banking space. In the large cap heavyweights such as Axis Bank, ICICI Bank, and Kotak Bank, I think these would be the leaders if the Bank Nifty in the next leg of up move when the index goes up, because we have seen that FIs have also been on the buy side. And usually when these when FIs turn buyers, these large cap stocks tend to do well. So I think ICICI Bank, Axis Bank, and Kotak Bank, and HDFC Bank would be our preferred picks, where one can look for buying on declines when the Bank Nifty comes near the support zone.
We're just going to be addressing in stocks and news, Ruchit. Stay on with us. We're going to come back to you with more. IRCON is the first one that we need to address today. Government is selling up to 8% stake in IRCON, and this is to raise around 1,100 crore. The OFS essentially opens on December 7th for non-retail investors, and retail investors can bid on December 8th. It's going to be at the floor price of 154 per piece, which is a significant discount even after the sell-off that we've seen on this one. The stock is right now trading lower as much as 8%. So IRCON is one that we're going to be checking with Ruchit in just a bit. But let's also talk about IDFC First Bank, where Warburg Pincus is going to be selling in 1.3% stake via block deal, and deal is worth around $100 million. And essentially it's going to be selling in shares at a price of 85 per share, 85.7. That also is a significant discount. Not a significant, but more or less a little discounted price as compared to the price that we are witnessing right now. The stock has taken a little bit of hit, 2.5% downtick there coming in for IDFC First Bank. Bharti Airtel, another one where Warburg Pincus may be also offloading in shares in this week. The transaction is likely to take place through a block deal. Shares are seen exceeding, the sell-off could be seen exceeding that 5,000 crore figure. Right now, that's also a bit negative for us. TV18 broadcast, where a bit of development has taken place. TV18 and E18 will now be merging with Network 18. Now, do remember the fact that E18 owns and operates Moneycontrol websites and app. TV18 broadcast shareholders will be getting in 100 shares of Network 18 for every 172 shares held, and E18 shareholders will be getting in 19 shares of Network 18 for every 1 share held. So that's a bit of development. TV18 broadcast is right now also a bit in negative, down and out, with losses to an extent of 7%. Paytm, that's the big one. Couple of brokerages have come out with reports on this one. Development suggests that the company will be increasing in the focus on higher ticket personal loans. Well, brokerages, at least Goldman Sachs has downgraded the counter. Look at the stock right now. It's almost locked in that lower circuit limit of 20%. So complete sell-off on Paytm, but Goldman Sachs has essentially downgraded it to neutral. Sharp EPS and TP cuts coming in on this one by the brokerage. It also has materially scaled back smaller. Essentially, the company has materially scaled back smaller ticket loans, and it's lowered in FY24 and 26 revenue adjusted EBITDA estimate by 10 and 40% respectively. However, now it expects net income to turn positive not in FY25 but in FY26. So that's also a bit of negative development coming in on account of that. Jefferies also talks about recalibration of business because lending partners are now dialing back on account of recent RBI measures. Morgan Stanley also typically has said that disbursements run rate will drop in the near term. M&M, which is hiked in the prices, will hike in the prices from Jan 2024. And essentially sugar stocks, that's the one that I need to chat with Ruchit, where the government is planning into discourage the diversion of sugar for ethanol production, a bit of negative for sugar stocks. Ruchit, come in on this one. Within that space, some of the analysts have said that these worries are a little, not as much concerning as it should be. But what do you make out of it? We've seen some traction, some correction coming in the sugar stocks. Which names do you like?
I think the momentum is still a bit on the negative side. So I would wait for some more stability to coming in this entire sector. And we have seen that these are more cyclical names where, when the trended phase goes, then they can continue over longer period of time. So there are no signs of reversals yet. A good risk reward ratio could be there in Balrampur Chini, but if we get that stock on dips around 380 to 390, where major support zone for the stock is placed previously, whenever corrections have been there, stock has managed to form bottoms around those zones. So not at current levels, but in case if one has to take any kind of contra call in this fall, then Balrampur Chini, if comes around 380, 390, that could be a good range to go long on this stock over there.
Talk about Paytm. Right now, the stock has been locked in that lower circuit limit of 20% None of the stocks that we've actually spoken about have fetched in are positive at this point of time. All of them have clocked in losses. What do you make out of something like a Paytm?
So it's already at the circuit, and no doubt the momentum could continue further on the negative side going ahead. Because we have seen a huge gap down today where the important swing low support has been breached with a gap. So ideally, in such situations when traders are stuck with long position, they would look for exiting in case the circuit will open and if we see any kind of pullback move. So better to stay away from the stock and rather wait for some more clarity. And in case if we see any kind of pullback moves, then one can use that as an opportunity to exit.
All right, Ruchit, we're just going to leave it at that. Thank you so much for taking out the time and having a conversation with us. But, let's also quickly navigate our conversation now to the fundamental side of the story and chat about the new age companies and essentially find that if it's the right time to enter the markets. And to take the discussion forward, we're being joined by Pankaj Pandey, who heads the retail research for ICICIDirect. Morning there.
Hi, good morning. Thanks for having me.
Pleasure is all ours. Let's start off with new age companies first. Something like a Paytm, completely, there is a bit of significant loss coming on this one. It's locked in that lower circuit limit of 20%. Essentially on the development, which says that the Paytm is now, the company is expected to give out fewer low value personal loans. Essentially, the stock has taken a hit on account of that. There were a couple of brokerages which have downgraded the stock because of this development. What do you make out of this and new age companies put together?
So we don't really have been tracking new age companies largely because valuations were never comfortable. We haven't really tracked, or we have never recommended this space, I think, for the past for some time. And I think what we are, for example, liking when you look at BFSI spaces, something like, say, SBFC Finance, where we have a target price 105. So it's a company which is into MSME financing segment. With a CAGR growth rate expected in excess of 30%. Something similar, what we also like in low ticket financing categories, MSME finance player, where RBI is looking to push players to lend. So I think there also we are expecting some 35% kind of a growth. And overall, I think these are some of the pockets which we would like if people are looking at, or if investors are looking at high growth segments within the BFSI space. And I think clearly from a Paytm perspective, though we don't track the stock, but I think 40% of their loan which they were giving were to the ticket sizes of 50,000. So that I think RBI has never been sort of comfortable on that side. So our sense is that we will sort of continue to avoid this company or new age companies in general, given the fact that valuations have never been comfortable. But if somebody is looking at high growth segments, then I think SBFC Finance or something like Spandana Spooty should do well.
Sure. Also, let's talk about sugar stocks. A bit of correction that we witnessed in the previous session. Let's also pull up some of the sugar stocks that we have, like Bajaj, Hindustan, Balrampur, Chini for that matter, also just to see how the trend is stacking up for this one. But sugar stock essentially have, a bit of correction that we saw after there were few reports which suggested that a government meeting is aimed at controlling the sugar prices by diverting in supplies away from ethanol production, which essentially have been a high margin product for all of these sugar companies. What do you make out of this space, and within the space, do you like anything?
So we used to track sugar, but I think what we have seen historically is that most of the companies are now available in double digit. I think they were attractive, and some of them were available in single digit multiples. Now, while structurally things are good in terms of blending, getting increased further from say 12 odd percent to 15 odd percent and further to 20 odd percent. But I think we all know that the monsoons have not been great, a bit patchy in parts. And I think given the fact that sugar prices had sort of inched up, I think measures like these from this government obviously will have implications in terms of the overall profitability going forward. So I think, and we have already seen good price rally in the stock. So at this point in time, we wouldn't sort of look to sort of reinitiate or chase these stocks again.
All right, a bit of consolidation that has taken place today, Pankaj, after 7 consecutive sessions of rally that we have seen. Perhaps bulls have taken a breather in today's trading session. Just wanted to understand from you, where do you see the markets headed? Of course, it's difficult to determine a top or just trend based on one day's performance. Completely get that. But FII trend thus far, if you look at the trend today, they have turned in the net sellers for the first time in almost 10 sessions of being buyers. Do you see that trend further continuing in the month of December, which typically has been a month where FII activity has been really subdued?
So I think a couple of things on Nifty. Our fundamental target is 21,400. That's FY25 basis numbers. But our sense is that once we introduce FY26 numbers, we will get a decent upside even from current levels. And good part is that even for next 2 quarters, our sense is that the margin profile for say tier 1 Nifty companies is going to be better, because first half we have clocked about 19% kind of a margin. Last year, we had 16% kind of a margin in the H2. So obviously you have a decent base effect, which will sort of help companies to sort of deliver a decent set of numbers. Now on the FI flow, our sense is that with the kind of decline in yields, what we are seeing, eventually the inflows will also come up. So from a setup perspective, our sense is that the large caps, especially BFSI, should do well. And on top of it, since the political anxiety is sort of getting addressed, so then infrastructure as a space ideally should do better. So these are the 2 pockets where we feel that price performance plus inflows should see some traction. But structurally, we have reposed on the market. Like you said, the markets have rallied 1,000 points, so some bit of a consolidation at current levels, I think, should not be a worry.
All right. Any other sectoral indices that you're looking at right now, which looks like a theme, essentially, which looks crucial to you at this point of time, or rather looks interesting? IT has thus far not participated into the rally. Banks, PSU Bank, private sector banks seem to have participated. What distinction do you essentially make, A, between the IT names, and B, versus the private bank names?
So I think when you sort of look at IT, our sense is that it is very difficult for IT, even with the recovery, if it happens in US, to sort of outperform Nifty from a earning growth perspective. So while there could be some incremental gains, what you would see, but IT structurally is not looking to sort of outperform. I think what is looking good is the banks. So banks, we are comfortable with both PSUs and private. So for example, HDFC Bank, our sense is that if the margin recovery pans out, say from 3.4% to 4%, ideally it should do well with a target price of 2050. Similarly, we are quite positive on SBI because I think given the response what we have seen from Bank of India, I think SBI also looks good because this is one of the few banks which is available at 1.2 and possibly with ROAs expected to touch 1%. Mind you, Bank of India is trading at 0.8 time book with a ROA of 0.8. So obviously SBI can command a premium, and like I said, then there are smaller subsegments within the PFSI which look attractive. On the infra side, what is looking good is obviously L&T because I think order pipeline is good. They already have a 4.5 lakh crore kind of order book. I think there is very little doubt that the capex template of the government is likely to remain the same. So the entire infrastructure as a segment should sort of play out better. I think IT and infra and banking look quite attractive for the next few months.
All right, that's the word coming in. Pankaj, we're just going to leave it at that, and thank you for taking out the time and having this conversation with us.
Thank you so much. Pleasure.
All right, with this, it's a wrap, and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us in the link at the bottom of your screen. And for the rest of the page, stay tuned into moneycontrol.com and Moneycontrol app.